Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Today we're looking at WideOpenWest's 8K filing. It seems like some big changes are brewing for this internet and cable provider, and we're going to break down exactly what that means for the company and its investors. Before we dive in, make sure you subscribe to the channel for more of these deep dives and join our Discord community, linked in the description below. This filing is from August 11th, 2025, and it announces a major deal WideOpenWest, or WOW as they're known, has entered into an agreement to be acquired. This is a pretty significant moment for the company and its customers. So who is WOW? Well, they're a cable and internet provider operating across several states in the United States. They're known for their broadband services. Think of them as your go-to for internet access, though they also offer TV and phone services. The big news is that affiliated investment funds of Digital Bridge Investments and Crestview Partners are acquiring all the outstanding shares of common stock of WOW that they don't already own. In simpler terms, an acquisition is happening. This means outside investors are buying up the company. It's worth noting that WOW's common stock is traded on the New York Stock Exchange under the ticker symbol WOW. So this acquisition is a big deal for anyone holding that stock. This particular filing is a Form 8K, which is like a current report used to announce major events that shareholders should know about. Think of it as an official announcement of a significant corporate development. The company is using this filing to discuss the transaction, which aligns with what's called Regulation FD disclosure. This rule essentially ensures that when a company discloses important information, it has to make sure that same information is available to everyone. Not just select people like Wall Street analysts, they are publicly sharing the news via a press release. The deal involves the acquisition of shares, meaning the investors are buying ownership. Digital Bridge and Crestview are well-known investment firms that often invest in infrastructure and technology companies. So this points to a strategic move based on the perceived value of WOW's assets and market position. Now, the filing includes a really important section, a cautionary statement about forward-looking statements. This is standard legal language. It basically means that any statements about the future of the company, the transaction, or its expected benefits are just predictions. They are based on current expectations and are subject to risks and uncertainties. They can't guarantee that these future events will actually happen or turn out as planned. This is super important because it lists out potential risks. For example, completing the deal on the agreed terms or even completing it at all is a risk. They mention regulatory approvals needed and other conditions that must be met. There's also the possibility of litigation related to the deal, which could disrupt things. Another risk they highlight is that all the work involved in this acquisition could distract WOW's management from running the day-to-day business. This could potentially harm the company's operations. They also worry about keeping key employees during this transition period and how business relationships might be affected by the announcement or completion of the deal. Transaction costs are also a big deal. Deals like this involve a lot of fees for lawyers, bankers, and advisors. The filing openly admits these costs could be higher than expected. Plus, there's always the chance an event could occur that causes the deal to be terminated, potentially resulting in WOW having to pay termination fees. They also warned that if the deal falls through, WOW's stock price could really take a hit. This is a common risk in these situations, as the market often prices in the expected success of a deal. The filing then points to where more information will be found. WOW will file a proxy statement with the SEC, and this document will be sent to all its stockholders. A transaction statement called Schedule 13E3 will also be filed jointly by WOW and the acquiring entities. These documents will contain much more detailed information about the transaction and are crucial for investors to read before making any voting or investment decisions. Investors are strongly urged to read these documents carefully, a common phrase signaling their importance. This section talks about who might be involved in recommending the deal to shareholders. It mentions WOW's directors, executive officers, and other employees. It also references previous filings like proxy statements and their annual report on Form 10K to provide information about these individuals and any changes in their stock holdings. Basically, they are informing shareholders about key people involved and where to find public information about them. Finally, the filing has signatures. This is a formal part where authorized individuals like the Chief Financial Officer certify the accuracy of the report. In this case, it's signed by John Rego, the CFO, dated August 11, 2025. Now let's talk about the bigger picture here. WOW is being acquired. This signals a consolidation trend in the telecommunications industry, where larger players or investment firms often buy smaller companies to gain scale, efficiency, or access to new markets. DigitalBridge and Crestview are likely seeing value in WOW's subscriber base, its network infrastructure, and the potential for operational improvements under their ownership. From an investor's perspective, this filing is a heads up that ownership is changing hands. For customers, it might mean changes in service, potentially even a new company name down the line, though that's not guaranteed. The risks outlined in the filing are standard for any major acquisition, but they are worth paying attention to if regulatory hurdles or unforeseen issues pop up. The deal could be delayed or even scuttled. What's absent from this particular filing are detailed financial tables for the current period. This 8K is primarily about the acquisition announcement. For a deeper financial picture, we typically look at their quarterly 10Q or annual 10K reports. However, the context of this acquisition implies the buyers have done their due diligence and see a profitable future for WOW, either through growth or cost efficiencies. The fact that Crestview already owns a significant portion of WOW suggests they believe in the company's long-term prospects and are looking to consolidate their investment. When we look at companies like WOW being acquired by private equity or investment funds, it's often about leverage and optimization. These firms typically aim to improve a company's profitability through various means, which can include streamlining operations, cutting costs, or investing in new technologies. The success of this acquisition will ultimately depend on how well DigitalBridge and Crestview can manage WOW and achieve their investment goals and investing in new technologies. The success of this acquisition will ultimately depend on how well DigitalBridge and Crestview can manage WOW and achieve their investment goals. So, to sum it up, WOW is being bought. This is a major strategic move for the company with inherent risks and rewards for everyone involved. Keep an eye on future filings to see how this transition unfolds. What are your thoughts on this acquisition? Do you think it's a good move for WOW? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more corporate insights. And as always, check out our Discord server in the description for further discussion. Thanks for watching.